Billy and I here with our A&D Weekly Digest. Billy, how are you doing?
Doing real good today. How are you?
Doing well. Since our last conversation, Billy, the week was full of different events. So what we see with oil, tell us a little bit. I see there's been crazy conversations. US has decided to ban Russian oil, and now we see oil prices skyrocketing, right? I guess we're waiting for a deal, maybe either between Saudi Arabia or Iran. What do you see there? Where America can get oil today?
Right. Well, the crazy thing about the oil market for me, and I've watched markets forever, and that is on Monday of last week, crude oil futures hit $130 a barrel. On Wednesday, they hit 103. In fact, in 10 minutes, they dropped $10 and rallied back $8. The last time there's been a month with a range as big as what happened between Monday and Wednesday was in 2008. So the volatility is unprecedented. It's obviously mostly upside, but starting to fade now from that 130. So I don't say that's a top, but the panic buying seems to have ended for now.
And oil adds uncertainty to the rates, right? On what we'll see from Fed on the rate increase. That is why we see treasuries and
Certainly.
interest rate swaps going up.
Certainly, and it's, if you go back and look, the highest yields we've seen for several years occurred right after last month's CPI report. At that point, oil was trading in the $80 a barrel range. So people were afraid of inflation when it was in 80. Now it's been to 130. Everybody's mind's on inflation. A week ago Friday, we learned that there were 70% more non-farm jobs created last month than expected, and yet the market rallied, paid no attention to it. So the economic numbers right now don't seem to matter as much as combination of the fear of inflation and the uncertainty as to exactly what the Fed will do. 25 beeps, 50 beeps, what's going to come out in their statement. That's what the market seems to be focused on right now.
Okay, so we have for this week oil, we have inflation 7.9%, and we're looking for Fed's action, whether they would tackle inflation strongly or keep it, I don't know, maybe with a quarter increase for the Fed funds.
That's correct. And one interesting aspect I would mention real quickly, and that is the last month has seen open interest in 10-year futures drop by the equivalent of $50 billion. Incredible volatility in open interest. And the market has gone both ways in that month. It's rates went up, rates came back down, now they're going back up. What it means is most of the transactions in the futures market have been exiting positions. It's like everyone's standing on the sidelines. My guess is until after Wednesday. So we could see increased volatility. Yeah, the volatility could pick up again. So.
We see non-QM rates increasing slowly among different lenders, with an average rate for non-QM today at 5.6 to 5%. A&D is releasing new changes to its non-QM programs, with making DSCR available with only 15% down payment. That's a big move over there for us, and we're working on improving our jumbo program to provide borrowers with better pricing and more flexibility on their LTVs and FICO scores, as well as their documentation of income, of credit. That would go all by DU, by desktop underwriter of Fannie Mae, and would be a seamless process for borrower. So looking forward to that. So in wrapping up, Billy, our A&D Weekly Digest, I'd like to remind our audience, our brokers, of the upcoming webinars that we have next week. March 15, we'll be talking about bank statements. March 22nd, we'll be talking about A&D Appraisal Center. And on March 29th, we'll be talking about A&D Studio, which is a marketing platform for our brokers.
I'm looking forward to that myself.
Thank you, Billy. See you next week here.
Have a good one too. Thanks.